Imagine waking up to headlines that could reshape global economies overnight. Oil prices skyrocketing due to geopolitical showdowns. That's the dramatic reality unfolding in the oil market this week, as tensions between superpowers send ripples through energy prices and international relations. But here's where it gets controversial. Are these sanctions a bold move toward peace, or just another twist in a high-stakes game of economic chess? Let's dive into the latest developments and break it all down step by step, so even if you're new to the world of commodities trading, you'll grasp the big picture. We are talking about a major update from the oil markets on October 23, 2025, with initial reports dropping late on October 22 at 10:03 p.m. Universal Time Coordinated, and a fresh update at 2:15 a.m. Universal Time Coordinated. Crude oil prices have been on a wild ride upward following a stunning announcement from the United States, sweeping sanctions targeted at Russia's top oil giants. This move comes as President Donald Trump intensifies his efforts to pressure Russian President Vladimir Putin into serious negotiations to bring an end to the ongoing conflict in Ukraine. To put it simply for beginners, sanctions are like economic penalties. Think of them as a way for one country to restrict trade, freeze assets, or limit business with another country's companies or individuals. In this case, the US has officially blacklisted two of Russia's powerhouse state-owned oil producers, Rosneft PJSC and Lukoil PJSC. The reasoning: the US accuses Moscow of dragging its feet on committing fully to peace talks in Ukraine. As a result, Brent crude oil, a benchmark for global oil prices, jumped as high as 3% in a single day, pushing its value above $64 per barrel. Meanwhile, West Texas Intermediate, WTI, the US benchmark, climbed to just shy of $60 per barrel. For context, these price spikes can affect everything from gas pump costs at your local station to the broader inflation rates that influence your daily expenses, like higher prices for goods transported by trucks or planes. And this is the part most people miss. President Trump isn't stopping at just hitting Russia's producers. He's also aiming to tighten the screws on Russia's crucial export partners, namely India and China. These two nations are among the biggest buyers of Russian oil, so by pressuring them, perhaps through diplomatic channels or indirect economic levers, it could create a domino effect, making it harder for Russia to sell its oil and thereby squeezing its economy. This strategy might force Putin to the negotiating table faster, but it's not without risks. For example, if India and China push back or find alternative suppliers, it could lead to even more volatility in oil markets, potentially causing shortages or price wars that affect consumers worldwide. Now, let's address the elephant in the room. Is this approach effective, or is it playing with fire? On one hand, supporters might argue that economic pressure is a non-violent way to resolve conflicts, much like how past sanctions have influenced global events. But critics could see it as hypocritical. After all, the US itself relies on oil from various sources, and targeting allies like India might strain international friendships. What if this backfires, leading to retaliatory measures from Russia, or even a full-blown energy crisis? These are the debates that make this story so intriguing and divisive. So, what do you think? Do you believe Trump's sanctions will pave the way for peace in Ukraine, or are they more likely to escalate tensions and drive up costs for everyday people? Is it fair to involve countries like India and China in this geopolitical tug-of-war, or should the focus stay solely on the main players? Share your thoughts in the comments below. Do you agree with this strategy, disagree, or have a counterpoint we haven't considered? Let's keep the conversation going.